Hey guys, how you doing? Hope everybody had a great holiday season. Merry Christmas, Happy New Year to everybody. And just wanted to give you a quick market update, say hello. Um, you know, Things haven't changed much in the market. December, as usual, is a little bit less going on, but certainly a lot of serious buyers out there and sellers if they were out on the market. So there's a few things to think about. One out of every plate we see, one out of seven plates we see are from California, right? We know that. We're still seeing that it's still cheaper to buy versus rent when you take into consideration the fact that your rent's not going to go up. Your mortgage isn't going to go up when you buy. Interest rates are still super low, although they're starting to go up because the Fed is starting to slow the buying of their purchasing of bonds. And also we see a lot of money being printed. So inflation is going up. Usually when that happens, we see an uptick in rates. So what that means is, for about every 1%, you're looking at 10% higher payment. Rates have ticked up about 0.5% from where they were, in the low threes or high twos, depending on which week or month or day you're looking at them. Right now, we're in the mid threes, unless you're paying down your rate. So, but now would be the time to buy, lock things in, lock that rate in, lock those payments in, or refinance, which we can help you with all of that. My wife Cynthia and I are both realtors. She's a loan officer. Our son is a loan officer, and they're mortgage brokers. So that means they shop the best rates for you from wholesale lenders. You get the best terms, no processing or underwriting fees, no junk fees for refinances. They can do streamlines. VA, you're not going to find any better terms pretty much anywhere. And, their fee and pay structure is going to be a lot lower. So out of pocket, your terms are going to be much better off going with a broker, especially with modern home lending. That said, there's this thing called CMI, the Cromford Market Index, and basically the Cromford report comes out every day, and they're the kind of the gurus of our local market. And that CMI right now is holding at about 425.6. What that means is anything over 110 is a seller's market. So we're at 425.6. Anything below 90 is a buyer's market. Now, historically, Phoenix metropolitan area has always been a seller's market since the 80s, pretty much, except for a couple of short little periods where we had sort of a buyer's market. But we've always had a high demand here and just, a lot of building going on. And at this point, we just can't keep up with it. So here's some things to kind of keep in mind along with that. It's up 54 points over the last 30 days, but with December, that isn't a surprise because obviously December is a slower month, so there's a little bit less inventory, but the buyer demand is still going up. So for a forecast for 2022, what we would say is this right now. Looking at those stats to begin with, unless there's some sort of huge shakeup, they're forecasting about 3 to 4 different rate hikes over the next year. We'll probably see rates end up around the low fours by the end of the year with those 3 to 4 rate hikes. And that's coming from pretty much every, mortgage banking and the feds themselves, every institution out there. The time has come with all the printing of money, the slowing of the paying of the bonds and all that. So inflation, hyperinflation, which we're seeing, supply shortages, all that sort of thing. We're going to see prices going up. We're going to see inflation. We're going to see higher rates. So with that said, December is always going to be a little bit lower. We'll see more inventory coming on the market by the end of January, but we're also going to see more buyer demand as the months go on into spring and summer. So some things to keep in mind. If we were to look at that CMI, that Cromford Market Index, basically, from beginning of last year straight through till about August, and then it went to its lowest point around August, September, October, believe it or not, which means we actually had a little bit more inventory in there at that point, and then things went back up. A lot of that was kind of the COVID effect and all the other things that we've been seeing with lockdowns and people kind of influxing in and out of different states. But that said, Phoenix is one of the hottest markets in the country, always in the top 10. Right now, we're forecasted by many to be in the top 5 to 10. I would say we're probably going to be right there in that top 5 if I had to guess, and everything going on. So really nothing's changed, except people's mortgage payments are going to go up a little bit more, but they know so are rent payments. And you don't gain equity with rent payments. And your rent can always go up from year to year. And what people are finding out is not just up, the traditional $25, $50 a month, but people's rents are being raised $400, $800, even $1,000 or more a month, in some cases, depending on what part of the valley you're in. Now, how it's been made up over the last year is 4% of iBuyers have been that portion of the market, the iBuyers, like, all the iBuying companies that come in and buy up stuff. Then we've got 14% second homes, out-of-state buyers, that sort of thing. 19% have been investors, rentals, flips, that sort of thing. 63% owner occupied or primary homes purchases. Now, normally that is 75%. So there's quite a bit of a difference there in what we're seeing from what the average would be. Okay. So just, to give you kind of an idea on some of these other statistics that we're talking about, Fountain Hills has about 32 active properties at the moment. The average, usually the long-term normal average is 234. So their CMI is 710. It's huge. So remember, over 110 is a seller's market, or that CMI, and then under 90 is a buyer's market. So I don't expect to be in that buyer's market anytime soon, or just not getting enough homes to keep up with the demand. And with the rates going up, that may put some people, slow some things down, put some people out of the market in the lower price ranges. There's not a heck of a lot happening in the 200 to 300,000 unless you're in the outskirts of town, some smaller condos. But remember, with condos and townhouses, you tend to have higher HOA fees and things like that too. A couple of other things that were mentioned in the report recently was that Maricopa City was running at about 212, and Buckeye at 201, and Paradise Valley at 105. These are some of the lowest ever inventories that we've been seeing, in recorded history for our area and our market. So at the end of 2021, we were at a 392 CMI, which is that indicator. Last week we're at 404, and now we're at like 425. So just to kind of give you an idea of the flux, we kind of have a lot going on when you're dealing with inventory and inflation, interest rates changing. It will have an effect on some of those lower price points, but we also have a lot of people moving from places like California, Washington State, Colorado, where maybe they're used to paying a little bit more anyway, but Arizona is still affordable. Our market, Phoenix metropolitan area, is still affordable for many people coming from other areas. So what I would say is this: if you're thinking about buying a home, refinancing, now's the time to do it before those rates go up even more. You can always refinance later if rates tend to go down. But right now the forecast is we've already had one big one beginning of this year of about 0.5%. We're looking at 2 to 3 more by the end of the year, with every indicator and everybody on the planet that deals with this stuff, from the Fed down, saying that that's what we're looking at. So plan on, low 4s by the end of this year. And then by the end of next year, we would they're even forecasting another 2 to 3 at least rate hikes next year if things tend to go the way they've been going. And we'd be looking at about a 5% at that point, or possibly a little bit higher. So now's the time to buy. Now's the time to make sure you've got all your financial ducks in a row. We could talk to you more about what that would take to be buyer ready. Go shopping now. Be competitive in the market. What'll happen? What will happen is what will happen, of course, as a lot of people will say, but you also have to put a little bit of effort in on the front end to make sure you're competitive, just like anything, whether we're talking about housing, sports, investments, whatever that is in life. We've also got to be prepared, and we got to be ready. We got to put our best foot forward. So with that said, guys, if you have any questions, feel free to reach out. 480-788-8569 is our main line. We'd love to be able to talk to you soon. Check us out online at Mincola Group or MincolaHomes.com. Thanks a lot. We'll talk to you soon.